Hey everybody, hope you're doing well. We're going to go ahead and break down this trade that I took on NQ in the afternoon session here. So let's go ahead and dive into it. So you're going to notice immediately that I have my buy limit set at this gold gap right here. This specific gap was extremely meaningful to me, obviously enough to take a trade from for several different reasons that we're going to go ahead and get into here. The first things that you're going to notice, or the first thing I want you to notice, is this 9:30 a.m. price right here. So every day you're going to want to take that 9:30 a.m. opening price and extend it out all throughout the day because it's going to act as an algorithmic level where if you look for certain signatures and price at the right time, you're going to see nice reactions from like you see right here. So this 9:30 is overlapping with this 1 minute BISI right here. Okay, it's also within and overlapping a 1 minute breaker. So we have a high, a low, a higher high, and a lower low. That makes this up close green candle right here a breaker. So you have that, and you have this BISI overlapping with that 9:30 a.m. opening price. So I'm not just trading any fair value gap that I see. I need there to be algorithmic levels on the higher time frames and with timed elements um, aligning and supporting it. So let's dive into that a little bit further here. Speaking of time, you're going to notice that I just plotted these vertical lines right here. So these lines indicate the 1:50 p.m. time and the 2:10 p.m. time. So that is one of your afternoon session macros where we're expecting price to run. So let's go ahead, get this forwarded a little bit. Another one of those levels that was important to me was if you look on the left hand side right here in this chart, this is your daily chart. So if you take a look at the previous day, it's this big green up close candle that I'm hovering over right now. The wick that's on that, one, we're trading into it right now, but two, if you take a look at all of these wicks to the left, this is the longest and most protracted within all of those. So that's why this one catches my interest. And I want to take my fib and mark out all of those quadrant levels because I said before how I like how that 9:30 a.m. price is overlapping this gap. Well, what I look for and how I trust my fair value gaps is I want them to overlap with these higher time frame wick quadrant levels as well. So this one, you can see that red is right over top of this 1 minute BISI. So that is really a big reason why I liked this as a long right here. And of course, I had to have good targets, which we're going to go over in a minute here. Now you're going to notice that I just put on my new day opening gap indicator. So it's not an indicator that tells me when to buy and sell. It's an indicator that shows me where the new day opening gaps are. If you're an ICT trader, you probably understand what I'm referring to. So this gap was not only aligned with the 9:30 a.m. opening price, this daily wick upper quadrant level, but it was also stabbing through and overlapping this prior new day opening gap from December 4th right there. I always keep the last 5 business days of new day opening gaps on my chart. Those are going to be meaningful to me for situations like this. All right, so that's 3 levels that are indicating to me this is a high probability fair value gap that I can trust to take up to my draw on liquidity at the right time during this macro from 1:50 p.m. to 2:10 p.m. So when people say time and price, a lot of the times they're not even knowing what the hell they're saying, right? They just say it because it sounds cool. Time and price is referring to price where the gap or your PD arrays are overlapping with these significant algorithmic levels. Time is when these algorithmic levels that are verified by price and by these gaps and higher time frame levels, the time in which they're hitting them. And when it's during the macros and you have an obvious draw on liquidity, such as equal highs, session highs, new day opening gaps or imbalances, you are going to have a really high probability trade in your hands. And that's what I had right here. So let's go ahead, get this moving a little bit. See, we're stabbing into that gap right here. And you're going to notice that I say I want the upper half of this to hold. I'm saying that as this candle is digging down. So my stop loss is below this candle's low, okay? Because that is the second candle in the fair value gap sequence. And it's below all of those algorithmic levels I already talked about. Within your fair value gaps, you do not want to see, when you're bullish, the lower half of them get traded through on a closing basis. So it's okay if this candle comes down and wicks. That's why I'm saying upper half as this is coming down. What it needs to do is close in the upper half in this midpoint right here, above that, okay? If it were to close below that, I would need to see an immediate reaction back in my favor. But you'll see as this keeps on going, we're digging down, candle flips bullish, and we get a close back above. All it was doing, and why the wick down was permissible, is because look at that new day opening gap, right? We were just going down and touching that. So if you're sitting here wondering, why do all of these levels need to be overlapping in your fair value gap for you to trust it? It's because in retail terms, it's just providing more support within my idea, adding more confluence within my trade. So you can see that this is just acting as like a barrier for price to come down, hold my long, and keep on moving higher. Now you're going to notice that we have another gap. Okay, so let's let this play out. I annotate it right there, right? Why do I like this gap? Because it's in the upper portion of this 1 minute BISI, and again, it's overlapping that daily quadrant level, that red line. Okay, so if we can get a close above that, which we end up doing, you're going to see me add to my position right now. So I just added another contract right there because I'm anticipating that this is an inversion fair value gap, and this down close candle is going to act as a change in the state of delivery or an order block. So very specifically why I like that, you see how I just annotated it right there. Well, one, that order block, that down close candle, is overlapping with several quadrants. So it's not just your gaps that overlap with those quadrant levels and those other levels. Your order blocks can too, right? So this order block is verified as a reliable and trustworthy order block for a number of reasons. One, because it's overlapping your 930 price. Two, because it's overlapping your daily wick from the previous day upper quadrant. And three, this down close candle stayed in the upper half of the BISI. So whenever you see that, that is indicating strength to you. And we got nice displacement back above to that. So I'm expecting that to hold and take us higher. So let's get into the draw on liquidity as price kind of hangs around here. The draw on liquidity is this high right here because it's a perfect equal high with a data wick high from that same morning on the same day. So 8:30 a.m. there was a news release. It created a wick high. This high right here was perfectly equal with that. So I wanted to see a run higher during the macro time where time and price was aligning to take us to this level. Best case scenario, we had pre-market high, which is this one up here where my limit currently is. I ended up not needing the limit to get hit all the way up there. You're going to see me end up dragging it down a little bit more because I was trading a combine with my funded futures. My trading had concluded for the day with my Top Step funded accounts. So I was just taking this setup on a combine just to add a little bit more funding to my portfolio. So that's why you're going to see me kind of messing with the limits and checking the what the balance was at because I with the consistency rules I needed it to be at a certain number. And if I went over it, it would have been conflicting for passing the account. But you see how as we hit this new day opening gap right here, I dragged my stop loss above into break even. Why? Because if we were to hit this new day opening gap and this upper quadrant level. So just like this red line right here, there's one right here because that's where the high of the wick was, or the body opening on the daily candle. If we were to go up here, hit those two levels, and then come all the way back down to my entry, then I'm probably wrong about my direction, or we're just going to chop around. So that was the reasoning for the break even, is me kind of figuring out how much profit I needed for the account. And then you're going to see we take out that data high right there and then right into the take profit level. So that is really the whole premise for the trade. It's not just trading any gaps because they look good or there's a lot of displacement or anything like that. It's combining these higher time frame algorithmic signatures and levels and looking at the signatures on how price is reacting to these levels to gauge whether there's strength within your direction or weakness, and you should probably cut the trade. So these are all things that we're aligning right now within the given time. We had obvious targets being equal highs, and it was really your low-hanging fruit target to target this equal high because we were really looking for the pre-market high up here to get hit. But a 1 to 2.5 was offered at this high right here. So yeah, that is really the whole premise for the trade. Hope you guys found this helpful, and we'll talk to you soon.